All right, what's going on? Welcome to the channel. In this video, I am going to be sharing with you 4 different things that you want to do with your LLC in 2023 if you plan on getting access to business credit so that you can make more money faster in your business. We've been implementing these exact strategies with our clients inside of our coaching program, the Inside Inner Circle, all throughout 2022, and it's been working absolute wonders. And I don't see any of these things going away in 2023, which is why I want to share them with you so that ultimately you can take advantage of them in no specific order. So one last thing before getting into the first strategy is this is going to apply for you whether you have an existing business or if you plan on opening up a brand new LLC again in 2023. The first thing that you want to do is you want to open up a business checking account and or a savings account. Now, I haven't necessarily seen a difference in terms of data points of which one the banks are going to look at and weigh more. Hey, if you have a business checking account, they're going to approve you for more versus if you had a savings account. The whole thing is, as long as you have a business checking account that's opened up through your LLC, through your EIN, you're going to be able to get access to either some of the product lines that they have because you're building out the relationship, or you're going to just be able to build out your bank rating already, and you're going to be able to build out your bank rating at the same time. Now, there's really 3 types of banks or 3 types of lending institutions that I always recommend for our clients to check out, and so I'll give it to you. You want to open up a business checking account, and again, it can be all 3 if you're feeling spicy, or it can at least be one of these 3. So the first one that I would have you consider is going to be a major bank. Think of these as your tier A, your top tier list, right? This is Bank of America, Wells Fargo. We know how we feel about them sometimes. Chase, I wouldn't say PNC. PNC is maybe more of a regional bank. So Chase, Wells Fargo, Bank of America, and we can be even throwing US Bank in there. That's seen more as a top tier bank list, right? But then if we're looking at a second tier, that's known more as regional banks, meaning they're only located on maybe the East Coast, or maybe they're only located on the West Coast, or maybe they're only located, let's say as an example, North Carolina, South Carolina, Georgia, Alabama, and Florida. That's more of a regional bank. You want to now take a look at regional banks because this is going to allow you to, again, open up your horizons because they're going to offer products in-house that maybe aren't offered at bigger banks. A lot of times people say, hey, Irv, can I get maybe more funding with Chase? Can you get more funding with Chase? But sometimes with Chase, it's going to require a little bit more of a structured entity and a stronger credit profile. So just something to keep in mind as you're deciding, should I go with the big bank? Should I go with the regional bank? And then the third lending institution that you want to have in place to complete the trifecta is going to be a credit union. Now, I'll leave that entirely up to you with which banks and which credit unions you prefer to open up your accounts with, but this is at least going to get you into the right path. Now, if you're wondering how much money should you have in each of these accounts, ideally, you don't want to have anything less than $1,000. But if you are in a place where your business is producing or you're starting to produce or you've been in business for some time, then anything less than $5,000, $10,000 per account, you're really not going to be moving the needle as much. Again, especially if you're maybe thinking of going with the bigger bank, like a US Bank, Bank of America, or even Chase, where liquidity is a little bit more important than what it is with maybe a credit union, which is why so many startups tend to look at credit unions when starting out because they do favor smaller businesses because they are simply working more within the community. Now, the second thing that you want to pay attention to in 2023 with your LLC and your account is you want to make sure you're running funds through that business. People that get the highest return on, let's say, their investment with the relationships that they open up with these banks and with these credit unions is when they're running more transactions through these banks. So maybe they start to increase the amount of deposits that they make. Maybe they are making transactions directly through the bank account, because one mistake that people make is they think, oh, just because I have a business checking account or just because I have a business savings, then that automatically nurtures the relationship. Not necessarily so. You still want to have that organic feel to it. What the heck does that mean? That means that if maybe you have $5,000 that you opened up that account with, you want to set up some type of auto payment or auto deduction where you, as a service is being paid for, it's being taken out of, let's say, this checking account right here over at Bank of America, or this checking account right here over at Chase. It's going to have that organic feel to it, and then the bank is going to say, okay, this person or this business wants to be in this for the long haul, which is how you should think about this going into it anyways, especially if you plan on funding multiple LLCs. Once you have that first relationship set up, it helps open up the portal, or kind of like the pool, for additional funding at that same lending institution. This third one is important, so pay close attention to this. Whether you've done the first two already leading up into this part, or if you haven't done it just yet, this third piece can make or break how you set up your profile for all the funding that you're going to get now and in the future. You want to establish at least one line of credit, or one credit line for that LLC. This can come in a form of a business credit card. This can come in a form of a business line of credit. This can come in a form of a term loan. This can come in a form of a secured loan. Now, all four of those are different methods that you can use to fund your business. But if you're just starting out, one of the fastest ways that you can tap into or create essentially a trade line for your business is, if you didn't want to take the net 30 or the net 40 account, because this isn't necessarily geared around that. This is geared around actual cash cards that you can use, not just at the store for that specific store, but anywhere, right? So this video isn't just geared around, hey, just open up a net 30, hey, open up a net 45. There's a time and a place for that. If you're looking to get maybe some quick cash for your business, then you first want to take a look at some fintech cards. The reason why I like fintech cards, especially for those of us that are starting to produce some cash flow into our business, is because fintech cards are really going to take a look at two main things. They're either going to take a look at cash flow, or they're going to take a look at credit. They're not going to take a look at the third pillar, which most banks look at, which is going to be collateral, which I typically recommend fintechs, especially for startups. And by startups, anything under 3 months, anything under 6 months. Whether you have the credit or the cash flow, because remember, there's three pillars. You have the cash flow, you have the credit, or the collateral. When we're talking about fintech, they only look at two things, which is cash flow and credit. Some of them are only going to take a look at the cash flow that you have over, let's say, the last 90 days. As long as you've been averaging, again, on average, over $3,000, you're going to be fine. You're going to get some type of approval. And then on the other side, you'll probably go off of a soft pull, where they'll typically look at your Experian business and your Experian personal score. And then even if you don't have much cash flow, again, if you're a brand new startup, you'll still get some type of approval. Now, caveat with these type of fintech cards is they're typically seen as charge cards, kind of like you'll get with American Express Gold or a American Express Plum, right? Where every 30 days that you make a payment, the full lump sum is due. But the reason why we recommend this is because it gives you that quick cash injection so you can start making moves. And it also helps with getting some type of trade line reporting under your business's belt, which is ultimately going to help increase your business's ability to get funding in the future, because it's going to create something known as common credit. Common credit, in the simplest form, is a common type of credit that other lending institutions are going to see, and they're going to say, okay, if they already have a business credit card, a business loan, or example, business line of credit, we can extend them that similar product from our line. It's known as common credit, which is important to know. And the fourth thing that's been working wonders for our clients in the Inside Inner Circle, and I'll share it with you, this is mainly going to be for those of us that already have an existing LLC. Take a look at the reclassification of your LLC and the reclassification of your business banking account. If you have no idea what that is, take a look at your NAICS code, your NAICS code. That's the industry that the bank has labeled your business under. One of the ways that you can change it is when you go to file your taxes, or if you file your taxes, speak to your CPA, because on the top right-hand corner, especially if you're filing an LLC or through an LLC, through a C Corp, there's going to be a 6-digit code, and that's what's labeling what line of work or what business you're in. I can tell you far too often where you'll have a business that gets denied, even though they have impeccable credit on the personal and on the business side, but unfortunately their business is seen as a high-risk business, kind of like what you'll get with trucking for some reason, where that's just seen as a higher default. And then you also want to take a look at how the bank has you classified. So just flat out ask your banker, hey, how is my business classified right now? And if you see that it's classified in a high-risk industry, which you can just go ahead and check out, right? Just Google NAICS codes or high-risk NAICS codes. It'll give you a nice list. You can see if your business falls within those kind of like parameters, and then make that change accordingly. This can make or break the difference of not just you getting denied, but of you getting weak limits. I've seen clients reclassify their businesses, and they go from maybe a $5,000 limit to a $50,000 limit just off of this one change. So this isn't something that you want to sleep on. If you found value in this content, consider hitting the subscribe button down below and join the community. As always, if you are looking for more hands-on assistance, we do offer that inside of the Inside Inner Circle coaching program. Look, schedule a call with us. We'll see if it's a good fit for us to even work together. If not, we'll let you know, hey, this is what we can do. This is what we can do. We can still shake hands and be friends at the end. But other than that, for those of us that aren't at that level just yet, keep enjoying the free content. I will see you guys in the next video.